There's a lot going on in the market. There's a lot of push and pull between the bulls and the bears. And I've said during the week that I felt that the down move in the market felt a little forced. You just weren't seeing the super-duper bearish breadth readings that you would normally see on like trend days. I mean, you had a trend, kind of quote-unquote trend day the other day, and it was only like 2-to-1 negative breadth, but the market was still dumping. So it just told me that it was just the same low conviction, short-term time trade that has been in charge of the tape. And today I think they kind of got their clocks clean pretty good, so to speak. I had been saying that I thought that there was a narrow window this week to go lower before there would be a rally back up higher, and that's played out actually to the T so far. So the question now is, are we out of the woods? And my answer to that is that we are definitely not. The market is sort of this push and pull. I think that today's price action was a bit constructive. A few pieces of loose change that I didn't like. We didn't close above. I'm talking in SPY. I know a lot of people have spiders in their accounts, so that's why I usually use SPY over the cash index. So if you take a look, the key level I had said that I thought we needed to close over was the 211.27, which we closed below. And today's body actually didn't fully encompass the last 3 days' bodies. It took out 2 days worth of price action, and it took back a lot of the third, but it didn't. Obviously we didn't close on the highs, which is, I guess, okay. But we did close up below that 211.27, and I had said in my weekend update on Sunday that I thought that a pin of the 210 would probably fudge the most people, so to speak. And that still might be in play. We kind of had, today was really a short covering rally. It was fueled, the breadth was fairly strong, although it tailed off at the end of the day. We had been at 1.8 to 1 positive. We had poor highs in the market. They have not been repaired. So if you don't know what I mean when I talk about poor highs and poor lows, I'm going to, on the YouTube rebroadcast, or if you're a member of my YouTube channel, just look up the market profile, the basic look video. That will be in the description on the rebroadcast of this on the YouTube once again, and it is on my regular YouTube channel. So if you haven't seen that, check it out. It'll make things a lot more clear. So we had the poor highs, but often what you'll have when you have poor highs before it's repaired higher is a move back lower. There's a liquidation break lower, meaning people who have chased the market up don't get rewarded. They're the sort of the Johnny-come-latelys and the shortest of time frame, and they kind of take their chips off the table, and the market pulls back. And we had a P profile today, which just means it's indicative of short covering, which just means you go up, and then all the bulk of the volume is up at the top after a kind of like a single print move higher. And a lot of the rally today was in single prints, which told me today it at least started off as short covering, and then throughout the day, I guess there were people who played intraday for continuation or what have you. So it wouldn't shock me at all to see those sort of single prints taken back and the market to come back down a bit. We closed a little bit rich, although not crazy. We're currently about $7, I would say. Let's see, 733 from the VWAP, which is down at oddly close to 20.99. So that would take back a lot of the sort of the single print action. It would take back that big spike that was sort of the continuation. So it would not shock me to see the market come back down there potentially early tomorrow. If there's some type of a gap and the repair happens first, look for that to potentially fail lower to come back to the VWAP. I'm not sure what the order of operations are going to be, so to speak, with that, if we're going to go higher first or lower first, but that is what I'm looking for. I'm eventually looking for that 2108 to be repaired to the upside, but I'm also looking for some of these single prints at least to be tested or retaken back, maybe at least to the top of the spike. So some of those are down in the 2090s, so I think down in that area should kind of hold it if this rally is going to be for real. That is a fairly large point decline, though, considering the the ES closed in the RTH session. Let me see, it's just getting cut off here. That the regular trading hour session at 21:03, and then in the sort of the last 15-minute extended session, we closed at 21:06. Sorry, 21:06 half. Now, some of the references on the way down that were really key that I had been discussing is the 21:07, and we closed below that. So that to me has just me a little bit more iffy on the tape, and then I really would want to see it get back above some more of these swing highs. If you don't mind, I'll flip back to SPY. I don't like to flip in between the two too often, but I really would want to see the some more of this damage taken back to and really firmly get over the sort of the downtrend line that we're in. I mean, the market really isn't trending here. We're sort of just in a sideways pattern, but I really would like to see it sort of take back a lot of the weakness and get back into the upper distribution. I had been discussing that it wouldn't surprise me to see some type of a head and shoulders pattern set up here and really get people kind of crazy. It wasn't in my weekend video, but it was on the stream with in some conversation. But the low that we had didn't wind up being an equal low. It wound up being a bit of a higher low. So you kind of want to see the market get over the 211.27, and then you really sort of need to get over the 212.48, which would have been the left shoulder reference to kind of negate that potential. I'm thinking that could possibly happen here. I think if you get another follow-through day tomorrow and this doesn't get taken back, or if there's some type of a early move down to, like I said, to repair the spike and then it resolves higher on like some type of a 50-day moving average hold, then I think we could really be accelerated to the upside and have some type of a blow-off top. I'm still in the camp, though, that I think we could pin that 210. I have to take a look at the open interest and how that resolved today, and I won't know that until the morning. So I kind of don't have the ability to get to, say, oh, let me take a look at it, and then give you the read initially because there was a lot of volume today. But I do believe that that's possible that we do wind up seeing the pin there. I'm just trying to look in the options while I have you guys. Yeah, you see the volume today was too big in relation to the OI, so it could really shift big tomorrow. So I'll tweet that out on the stream as sort of a follow-up to this conversation. So the risks that I see in the market that are sort of looming here. Obviously, everyone knows about Greece, the potential Greek exit, and also the interest rates, and obviously the euro dollar plays into here, and interest rates. So I'm taking a look at the euro USD, for example, and I think the risk on a Greek exit would actually be a higher euro because you'd be taking out sort of one of the weakest of players in terms of the eurozone. And I think the reason the Germans are looking to kind of make the deal with Greece is because they benefit from a weaker euro. They're an export economy. They sell Mercedes and BMWs and fancy coffee makers, all kinds of stuff. So I believe that they benefit, and they don't want a stronger euro. They want a weaker euro. And I guess keeping Greece in the eurozone is sort of the dividend they pay, so to speak. So that's my thinking on that. With regard, I'm just seeing a couple of questions. There's a lot of questions on Netflix. I'll talk about Netflix in a little bit. I just want to get some of this macro stuff done first before we get a little bit more micro. So if you take a look at one more thing also that has me thinking there could be some type of a sort of a little bit of a bounce is in TLT. If you take a look at the I posted the chart earlier, so you could potentially check it on there. Today I put on a small little tester long just because it was at the 61.8 fib retracement, and I could see the argument for this to have a bit of a bounce. I had discussed a bit of a measured move from the last move down. We're a little bit below there, but I see a lot of support, at least really super duper near term, between the high 112s, which is like close to 113, and this 115 area. So if that doesn't turn around pretty quickly tomorrow, there might be a little bit of a move down lower to the lower part of the descending channel, which start with, depending on which time frame you're in, is anywhere between the 114s and like that area I said, the 113, and the risk reversal I did on today was short the 9 days to expiration 113 puts and long the 37 days to expiration 117 by 120 call spread. I think that was about 60 cents or a little bit more. I think it was either a little less. It wasn't more. I forget where the fills were. I'd have to check, but it was 60 cents or better. And I think that has a potential of a bounce. The real concern there, obviously, is if there's some type of a really sharp move down, and that was the reason why I funded it with the near-dated puts, because that theta decay is going to erode quicker. So if that area does fail, then there's primary trend a lot lower in the 108s, 109s area, at least on my chart here, and then I'd be looking to kind of reset and try it there again. That's really the risk I see, and if the bonds get that low, you'll probably start hearing some Fed talk to kind of talk the market back. I don't think they really want rates to rise super duper fast. I think their whole goal with this QE and the markets is sort of to try and remove volatility from financial markets, which is sort of impossible, but they are undertaking it nonetheless, and I believe that the bonds are going to be one that they're going to start intervening in soon, because they don't really want rates to rise fast. They want rates to rise, I think, but they want it to kind of be lower for longer, and normalization is usually between 5 to 6%. I don't believe they want it to go that high. I think they kind of want it to top out at somewhere at 3, maybe 4% max. That's usually where things are okay. When they start getting up close to 6%, that's kind of when the you-know-what hits the fan. And I don't really anticipate that they're going to quote-unquote allow that to happen. So we covered a lot of macro. There's just a couple of more little tidbits that I see as useful. The IWM has had a lot of relative strength in regard to SPY, which tells me there are still interested buyers. We didn't close as strong as I would have liked to have seen. I really wanted to see that kind of close at a new high over the 125.93. The close was a little bit shy of that. We closed at 120. We did close right over it. My bad on that one. So yeah, IWM closed pretty strong. We are now confirmed making higher highs and higher lows on this leg. So I think there's a good chance of a new high in IWM. If that happens, I would expect the S&P to kind of follow suit. So keep your eye on the IWM. It's sort of the quicker of the speedboat of the market. It kind of leads. Qs are also showing some relative strength. These all sort of failed. The Qs and the SPY on the 20 MA, but the Qs did close over that 109.42, albeit just a smidge. That area to me, anything above there keeps the highs and still higher in play. Below gets a little bit iffy. And, I've discussed the Qs are going to be going to be hard to really rock on the short side from the bears, because there's a ton of reference support levels down anywhere starting from 106. I mean, you could see a nice little correction here, but it starts getting a lot of support between 106.25, then the 105.26, 104.58, and then the 61.8 is 103.87. So like that area there's a lot of confluence of supports. So I can't really just see the market completely falling apart here, particularly in technology. So that's usually what most people play. So I believe we're going to be in a lot of chop for the summer. I don't know that it's going to resolve. If it does resolve, we'll know pretty quickly. But we believe it or not, this stalemate for the summer may still be on. I will caution you this, and this is what happened in 2011 when we had the big correction. They held the market in really well through the expiration, the quarterly expiration, and then after that it was absolutely off a cliff to the downside. So the real risk, in my opinion, is going to become after this quarter, when we're over. We're only 10 days into June, so we are still, in my opinion, in that narrow window for some type of a further decline. It's possible that it doesn't happen, that we might just rally. If we do wind up rallying into the end of the quarter, there's two scenarios I see as likely here. One is we rally strong into the end of quarter, and then there's the lock-in sell-off, and then that accelerates after the quarter ends. Or we're weak into the quarter, and then there's window dressing. The last week they make it look pretty, and then they could potentially dump it. So that's the two dump scenarios that are likely. So just you kind of want to fade whichever one of those happens in the last week, and then look to maybe reverse again. I know it's a little bit complicated, but that's sort of the way I'm seeing it. Yeah, or we could stay in range. That's also really possible. It's hard. It's really going to be hard to know. We are still in range. I'm playing really small. The advice I've been giving people is to play smaller size, smaller time frames. The real risk here is durational, and to look for smaller swings. So if you're normally looking for 10 points, maybe you're happy with 5 or 6 or 3 or whatever. That's sort of how I'm looking at it. Is we're playing a little bit of small ball here, not looking for the home runs. So let's discuss some of the momentum names you guys are all enthralled with. Ambarella, for one, is up really, really big. It's been multiple days up. It is holding in fairly decently up here, although the volume is really accelerated. I know a lot of people, the way I look at volume and the way most people look at volume are completely polar opposites. Most people look for volume to kind of confirm their thesis. If something is up already big, they look for more volume, like people are piling in to confirm it. To me, that means it's topping. So the same to the downside. When volume really expands huge to the downside, it's everyone is puking it out, and that's probably when you want to look for opportunistic plays to quote-unquote buy the dips. But Ambarella is up a lot. If you're first chasing it here after, let's see, it had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 21 days in a rally with like 2 down candles within that pattern. You're probably a little bit late to the party. The stock has rallied from $70 up to 114. Can you first buy it here and say you have good trade location, that that you're not buying the top? That's always kind of the question I ask. Yes, the stock can continue higher, absolutely, but are you buying it well? If the stock dumped here $10, would you feel really good about your purchases up here? I would say probably not. I'd be looking, this is again my opinion, I would be looking to sell this thing on rallies here, and then be looking to buy it back on dips. A 50% Fibonacci retracement, although today we did make a slightly higher high. The pattern is still bullish. Like I said, the stock could easily still go higher. I'm not, saying that the thing is a top here per se, but for me, there's not a chance that I would first be loading up and buying this stock here for my first initial foray into Ambarella, so to speak. So I'm just trying to adjust my fibs here because it did make a slightly higher high today. So just bear with me for 1 sec. There we go. The 50% Fibonacci pullback is $93, and the 61.8 is 87.66. So I would be looking, and I will be looking, to do some type of put ratios to play for a little bit of a pullback, and then get long at one of these reference support points. So I'm thinking Ambarella is like a little bit late. I don't know that I would step in front of it with a short. If I did, it would absolutely be defined risk. I'd do some type of a put spread at the most. I would not be outright naked shares here. I would be a little bit nervous with that. Netflix. So Netflix, the news has never been better, right? They might get a BABA. BABA may buy into them. They're doing a stock split. The stock has been up huge. It's up... I think it's up like $200 from the earnings gap, which is a lot. That's a lot of points, and it had been up big into the earnings. So from the low, this stock had come from, if you looked at the channel touch where it first launched from, was 409.25, and the stock today is kissing close to. I think we got close to 700, right? We were. It stopped at 692.79. So they're doing some type. They're going to do a split in the stock. I've heard anywhere between 5-to-1 or even 10-to-1, which I think would probably be the smartest thing for them to do, and they could start attracting some retail buyers and maybe sap up some of this excess. But I think that the stock will probably be really will hold in strong, at least until the split. They do have an earnings release coming up here, which is I believe it's going to be on 721. So my advice would be the stock is up a lot. For me, I'm not in the stock. I had been in it earlier. I'm sort of upset that I missed this last bit of a run, although I have been saying in the weekend video that I think the stock looks pretty bullish. I know a lot of people have been asking me if they should step on the short here, and I've advised sort of not. I've been saying that my opinion is not, and I'm glad at the very least people have saved some money on this. So, and for sure made. I know there are a lot of people who've been in it who've been kind of like Chicken Little longs, and I said if you're already in it and you have good trade locations, stick with it and just keep raising your stop. You know, book some profits and raise your stop. The stock has had a huge acceleration. I mean, in the last 2 days, it's up a super big amount. So I would be really careful first piling in here. I would be looking to I still believe it's a buy the dip stock. I do believe at some point, believe it or not, it's going to come back into that earnings gap range of 568.75 to 530. I would be a buyer down there, but I'm a little bit loath to chase this thing into this amount of strength. If you're already long, you know, you're probably going to be rewarded with still higher prices. But for me, I would need to see this cool down a little bit. These stochastics are way up there today. The volume was pretty big. I don't know if it was necessarily capitulation volume, but it was a pretty good amount. It was close to the earnings gap level from January 21st. Not quite as much, but it is approaching there. So as you're seeing the increased volume up here, as the shorts are kind of getting squeezed out of their positions, you probably want to look to take some profits. At the very least, maybe lock in some gains by selling some upside calls, particularly on spikes. They get juiced. That's my thinking. I'm going to just look at the IV here for you guys quickly in this today's option stats. 44%. All right, so the IV isn't really that much, but the price action, there has been a lot. You could lock in some of that by selling some out of the money calls. If you're long calls, I know a lot of you probably aren't long shares. One of the ways to kind of mitigate some of the risk, if you're long dated calls, you could sell against it some weekly short dated calls to take in some premium and mitigate some of the risk, or just turn it into a call spread, sell some upside calls as the hedge. That to me would be the way to go. I mean, unless you think this thing is going to run yet another $100. Who knows? I mean, remember the go-go days of the Qualcomm days. The stock was up $100 the day before the 4-for-1 split, and then was up another $100 in the after hours before it. Obviously, a very different time than we're in, but the stock is bullish. If you're long, I'd stick with it. I would just use some, I would just use some risk management discipline and just keep trailing up stops and maybe hedge it out a bit. Let's see. BABA. Someone had asked about BABA. So BABA, I had been bullish on. I had made some bucks in it, and it's been a little bit weak since then. I had said that if we lost the 89.29, that the 50-day moving average would be in order. We'd be testing that. We stopped just ahead of it, like a couple of ticks ahead of it, and we rallied back up since. We may pin $90. I think at some point this thing wants to get back up to the 98 to 100 level. They have a lot of stock coming online at some point soon. So I think they really want to try and manipulate the shares higher so that the absorption capacity of the stock is better than if they just dump it onto the market here. I believe a lot of the weakness in the stock has been this share overhang and people sort of just waiting for things to resolve. There was also some fraud allegations with people, not that the company is committing fraud, but that people are posting fraudulent items on the site, and I think that's been a bit of an overhang. So that's just my opinion with BABA. It's sort of working off its sort of IPO baby fat, so to speak. That's my opinion on it. Crude oil. Let's jump to crude for a minute because that's a big call of mine for sort of for this year. All right. So if we look on if you look on a longer dated chart, and we are not in the right thing. Let's go /CL. So if you take a look at crude, it's just sort of in this flag pattern. It's been basing here, but it's making higher highs and higher lows. I believe that the stock is going to see the 38.2 fib retracement, which is 67.34. And my ultimate target for it is where the really big breakdown happened, where at the 50% fib at 75.03. I'm sorry, 75.05. So I think oil is going back to 75. I had mentioned that in the weekend review that I was sort of a little bit bullish on a few oil stocks. I had mentioned Total for one that I thought was sort of getting there. We had a pretty nice gap today. If you're in it, maybe book some profits or just use today as low as the stop. I'm still looking for the 50 MA touch there. Same thing with BP. It rallied a little bit ahead of the channel, but bullish. It stopped right on the 200-day. I think it has a little bit more of resistance coming up between here and 42, so I'd be looking to take some profits or at least trail up stops a little bit midway into range there. Exxon is still showing some weakness here. It was sort of the weakest of them all, but it's not really breaking down in the way it quote unquote should. Anything below 86.03 to me is weak, and I have been, it kind of stopped just ahead of there today and then backed off. I'm looking to buy Exxon. I just don't know if it's going to be, believe it or not, higher or if I'm going to buy it lower. I've been looking for like 74s. 74.59 is the 61.8. I would love to buy it down there. The 80 is the 50% retracement, but I would love it in the 74s. I would also like it, believe it or not, to pay up for it. I'd like it over 90 bucks, 90.09, because it would be making then higher highs on the leg. I don't necessarily always want to pick the bottom and stuff. I kind of want to buy it when the momentum changes and I know that the stock is sort of quote unquote safe. Let's see, Tesla. I'm bullish on Tesla because I think oil is going higher. I also think that they're going to have a lot of momentum in terms of headlines because of their Model X release that's coming up. Today, I think, was just a little bit of sell the news. There was probably a lot of short covering and people chasing some late week hands, getting in ahead of Elon Musk's owners meeting. If you take a look on the chart, it stopped at 58.75, and that's not a surprise because 57.70 was a gap fill. So I think there were also just some people who kind of were burnt there, who were just waiting to sell. I think it's the best thing for it would be a little bit of more sideways consolidation, although we did put a lot in. The risk to me here would be a pullback somewhere between, depending on the strength of the market. If the market holds up, I think 38.75. If it doesn't, we could pull back all the way, believe it or not, down to the like the 225s areas, 225, 226. I don't know that that's going to happen. I think the stock is going to go back up to the old all-time highs, and I think it's going to make new highs. I'm looking for it to make. I was pretty bullish, and I think in the weekend review video for it. So if you want to go back for some more detailed analysis, you can see my thinking in the charts there. The link to that will also be in the YouTube rebroadcast, or if you're on my YouTube channel or on my stream, you can see it. So that is my thinking on Tesla. With regard to, just looking through some of the other names, Twitter, same BS as it's always been. This is just grinding and you know, sort of just working off all the people who had been long and now losing faith. There's been a ton of downgrades and the stock is just languishing. That's good. I mean, I'd like to, I do have a little bit of a long in there, nothing obscene. There is some risk down to 34.62, which is the last reference low, kind of to fill up that triangle. If they really, really kind of screw the pooch, so to speak, and the market gets weak, I think that it could, believe it or not, the real risk is to move back down to the all-time low at 29.51, and I think that's sort of what people are afraid of, and they're waiting. My money is that that's not going to happen. I think it's going back up to 45. That's where I sort of see there being some resistance. Pre-earnings, there was a lot of open interest in 45, 46s. I think that area will be a brick wall to get through for a while, but it wouldn't shock me to see the stock get up there. It'll probably have to be on some news or rumors or even, God forbid, some decent earnings. Their management is really proving to be disappointing. They're not monetizing. They're definitely not Mark Zuckerberg, that's for sure. I don't know if there's going to be a management change in the company or not. I know that's always rumored. I think the management is fairly competent. I think they just sort of need a kick in the butt from like a Carl Icahn type to kind of get it going. Yeah, I think Periscope's pretty great too. I just don't think that they're going to be able to monetize it so well right away. And I believe I think YouTube and Facebook will come out with competitors. I believe there's a Facebook competition, something that's coming out relatively soon. So we'll see how that plays out. Someone had asked me about FCX. I actually have a small long in this stock. This is also partially because I believe in oil going higher. They had bought some oil reserves, sort of not well. They paid up for it, and the stock has suffered a lot. They've cut their dividend, and the stock has started to make some higher highs and higher lows. Although here we're sort of just languishing at the lower part of the channel. There was a bit of a look below. Now we're hovering around the 50-day. I would say if you're long the stock, just use the 1926 low, I guess, as sort of your reference stop. You probably want to be a little careful if that's lost. But I do believe it's going to get back up. I've been looking for a move up to about 27, which is really where the real breakdown took place. I think it could potentially get back up there. That's sort of what I'm looking for. If you look where it topped this last time, it kind of got into the sort of the next distribution, the top of the distribution, and then it backed off. So the sell-off wasn't so surprising, but I do believe down here it's probably a good risk reward, and I actually nibbled a little bit myself. So that's my thinking on FCX. Nothing huge, but I'd rather be a buyer here than a seller, so to speak. The risk reward here is, I think, decent. So someone was asking me about Facebook. That's sort of my big forte, right? That I'm always dealing with Facebook. So the stock was looking real good over on the close on Friday, and then it just sort of fell back, filled the gap, got a little bit lower, back into range, and now rallied back up. You really need to see the stock clear this 82.95 to make a higher high and a higher low. I believe the stock longer term is going to go over 100. I think that it's taking a really long time, right? I mean, I think it's working off sort of a lot of its run-up that it had from the 38 low and that big spike and the following run. And I think it's sort of just recharging in this area. I think it's also... I don't think a lot of Wall Street people understand Facebook. All they ever talk about is how it's so expensive, it's 80 times earnings or what have you. But what they leave out is that the stock is growing its revenues really fast, and it's actually taking share and growing its revenues faster than Google. And I think a lot of the reason for Google's relative weakness to the market is, yes, the EU overhang. I think that is huge. They want to break up Google. We'll see if that happens or not. I think they're giving them kind of the Microsoft business. And I think there's a lot of fear and a bad taste in the mouth left from what had happened to Microsoft and the fate that befell them being, basically flat for the better part of 20 years. So that's my thinking on my thinking on Facebook here, that they are taking share from Google, that they are taking their they are growing their revenues well. I like that Facebook is able to create new business lines pretty much overnight, and that they're kind of profitable, like basically out of the gate. I think that another thing is when Snapchat comes public. It's weird. The Snapchat CEO talked about he thought that there was a bubble in valuations, but then in the same breath or in the next sentence was pretty much saying he's coming public soon too. And I think that the Snapchat IPO is going to show just how valuable Instagram is, because Instagram is much better than Snapchat in my opinion. It's a much more tried and true and better platform, and they are going to be monetizing that, and I think that the $1 billion that Zuck spent on it is going to look like rank conservatism compared to what the Snapchat IPO is going to look like, and I think that should be some fuel in the tank for Facebook to go higher. I think that we've covered a lot of good stuff here so far. Is there anything else that you guys are really curious about? Looking at the chat here for some stuff. Thanks. All right. So I guess we could wrap it here. If you have any questions, be sure to follow me. Yeah, we could do NXPI quickly. So NXPI, to me, I'm just looking at this chart here, this isn't one I follow normally, so I just give me a second to take a look. So if you're first getting in here, it's pulled off the highs. You really don't want to see this get much below 99.90, like that 100 level. You can see the hammer yesterday stopped a little bit ahead of there. I would be a little bit cautious if you lose that. It is making higher highs. It looks like it's burning off some of the move. This might just be choppy ahead of their next earnings. I don't really know their business well enough to say anything. I would just be cautious, and maybe you want to use that 50-day hold hammer from yesterday's low as your stop, somewhere between, let's say, 100, that 99.90, and this 101.15. I would use that area as a stop. If it gets below there, you know what I mean, it starts getting a little bit more iffy. So that was the NXPI. Anyhow, let's use that as a wrap. And you could be sure to follow me on Twitter. My handle is @JustinPulitzer. And you can find me on, be sure to subscribe to my YouTube channel. I think a lot of you guys would enjoy that, and I think it would be very helpful for you. That's Justin Pulitzer Trades. I will post that link also. Actually, if you're seeing this on the rebroadcast, you're already on the YouTube channel, so just hit the subscribe button. Anyhow, let's have a good week, and cheers.